Something has just happened on Ethereum's network that we've only seen twice before. The number of Ethereum transactions has recently spiked to new all-time highs. This metric measures the actual on-chain activity taking place on the Ethereum blockchain. And right now, it's signaling record usage. The last two times we saw such a run-up in on-chain activity was from 2016 to 2017, and from 2020 to 2021. The first instance coincided with a 150,000% rise on Ethereum, and the second one with a 4,500% rally. In both cases, Ethereum went on to set new all-time highs. That's because when network transactions surge, it signals accelerating adoption. More usage means more demand for Ethereum's network, which directly increases demand for the token itself. But despite the surge in transactions we're seeing today, Ethereum is still sitting at the same level it was in early 2021, almost 5 years ago. But as we can also see from this chart, transaction activity on Ethereum is a double-edged sword. When it peaks and declines, it leads to violent declines on Ethereum's price. So it's extremely important to evaluate how long-lasting we should expect this jump in Ethereum network activity to be. Because if we zoom in and overlay this chart showing profit-taking by long-term Ethereum holders, we can see it has just spiked to the highest level in this bull run. The last two times we saw a similar ramp up in realized profits were in March 2024, just before a 45% drawdown, and in December 2024. Before Ethereum dropped 65%. So it seems many experienced Ethereum investors are booking profits today, expecting the network activity to be temporary and ultimately lead price lower, a bet that they've made successfully in the past. We can assess how strong this fundamental story on Ethereum is by looking at how well it is positioned in the fastest growing sectors in crypto. This chart shows the performance of 10 major crypto sectors since the beginning of 2025. Right at the top, we can see decentralized finance leading with a 45% gain because of easing restrictions on this sector by the SEC this year. And close behind are real-world asset tokenization and stablecoins, taking the second and third spots respectively, primarily driven by the regulatory clarity provided through the Genius Act. So if we want to understand whether Ethereum still has room to reprice higher, we need to evaluate its role across these top 3 performing sectors, because Ethereum's positioning within them will tell us whether today's surge in network activity reflects only short-term speculation or a much deeper wave of adoption that isn't yet fully captured in its price. Let's start with decentralized finance, or DeFi, which is simply using blockchain technology to let people borrow, lend, trade, and earn interest without banks or middlemen. This chart shows the total value locked in DeFi protocols. Back in May of 2025, that number was at $80 billion. But then, the SEC announced that it was easing restrictions on this sector and stated that liquid staking tokens would not be treated as securities anymore. This gave investors and developers the regulatory green light to expand activity. As a result, capital surged into DeFi, and the total value locked has now climbed to $145 billion, nearly doubling in just a few months. If we break down this total value across different crypto networks, Ethereum accounts for $90 billion of it. In other words, over 60% of all DeFi activity today runs on Ethereum's blockchain. With the regulatory tailwind now in place, it's very likely that we see this momentum continue, and the total value locked in DeFi surpassed the $150 billion peak we saw back in 2021. And if that happens, Ethereum is already the dominant chain positioned to capture a very large share of that growth. So the leading crypto sector is firmly tilted in Ethereum's favor. Now, let's turn to the second high potential sector, real-world asset tokenization, also known as RWA. This chart shows the total capital locked in RWA, which simply means turning traditional assets like real estate, bonds, or stocks into digital tokens on the blockchain so they can be traded and accessed more easily. Since 2021, the value of this sector has exploded from just $70 million to $15 billion. That's a 215-fold increase, clearly highlighting the massive surge in demand for tokenized assets and the rapid pace at which this market is expanding. Now, if we break down how this capital is allocated, Ethereum accounts for $7.5 billion out of the total $15 billion, which means the Ethereum network makes up half of the entire RWA market today. The next closest competitor, ZK sync era holds only about $2.3 billion, which is 15% of the total RWA value, telling us that Ethereum is more than 3 times as dominant in this sector as any other network. So when it comes to real-world asset tokenization, Ethereum already sits firmly at the center of this growth story. And now we come to the third key crypto sector, stablecoins. This is an area we've covered extensively in our recent crypto videos, highlighting the 100% run-up in the total market cap of circulating stablecoins since 2024, and the exponential surge in stablecoin transaction volume. A major catalyst for this growth has been the passing of the Genius Act, which laid out a clear regulatory framework for stablecoins. It set the rules for how US dollar-backed stablecoins like USDC can operate, opening the door for more regulated institutional usage and adoption. This chart shows us the distribution of stablecoins across different blockchains. Ethereum currently accounts for about 54% of all stablecoins in circulation. The next closest competitor is Tron, but even then, it only holds about half of Ethereum's share. With the Genius Act now in place, the overall stablecoin market is expected to expand significantly from here. According to US Treasury Secretary Scott Bessent, total market cap could reach $3.7 trillion by 2030. From today's levels, that would represent more than a 1,500% growth in just 5 years. And because Ethereum is already the leading infrastructure for stablecoins, it is uniquely positioned to capture a very large portion of that growth. So from a fundamental standpoint, Ethereum is one of the most strategically placed blockchains in crypto's top 3 performing sectors. It holds over a 60% dominance in decentralized finance, 50% in real-world asset tokenization, and 54% in stablecoins. This convergence of market share is exactly what has fueled the rapid rise in Ethereum transactions we're seeing today. And with each of these sectors continuing to show strong growth potential, this momentum is likely to remain a powerful tailwind for Ethereum network usage going forward. That's why we're seeing an increasing number of public companies shift toward accumulating Ethereum. This chart tracks the total Ethereum holdings held by public firms, often referred to as Ethereum treasury companies. These are businesses that hold the Ethereum token on their balance sheets, similar to how some companies treat Bitcoin as a treasury asset. Their combined holdings have surged from just 40,000 tokens in April 2025 to over 2.8 million Ethereum today. That's more than 2.3% of Ethereum's total supply accumulated in just 5 months. And there's no signs of this trend slowing down yet. In fact, we're now seeing renowned investors participate in this trend too. Stanley Druckenmiller, for instance, owns a 2.5% stake in an Ethereum treasury company called Bitmine, while Peter Thiel holds a 9.1% stake, making him the company's largest shareholder. This tells us that Ethereum's recent outperformance still has room to run, because what we're seeing here is real fundamental adoption taking place on the network once again. So even though long-term holders have been locking in the largest profits of this bull run, we view it as a healthy rotation, where Ethereum is moving out of the hands of older holders and into the balance sheets of billion-dollar treasury firms. To be clear, that doesn't mean Ethereum cannot face some short-term volatility, especially after the parabolic run it has had since the April lows. But we don't believe we're looking at another 45% to 65% decline, like in the past 2 instances. Instead, any near-term pullback is more likely to present a buying opportunity. That's why at Bravo's research, we've recently initiated another trade on Ethereum, and will look to further increase exposure if we see a pullback. You can see all of our closed trades on our homepage for free. To follow our exact trading strategy step by step with real-time buy alerts, sell signals, and portfolio updates, join our community using the link in the description below.